Let's start with the earnings story then. We've had earnings as well in Europe out of ASML and Richemont. But the bank story is telling us a lot. It tells us about geopolitics. It tells us about the capital markets and the opening there of things like IPOs and the underwriting. And it tells us just about the broader macroeconomic sentiment as well in the US. What stood out to you? Does this set us up for a solid earnings season? What stands out from these numbers?
So obviously very strong earnings, and we're expecting this to be a positive earnings session overall. I think up until quite recently, expectations were kind of going a little bit more subdued and therefore they're easy to beat. But I think their earnings are now likely to be very strong. The AI capex bubble is continuing. We knew financials will always be strong leading it. I think what's interesting is that, 10 years ago, you would have said financials were kind of the leading edge of giving us the direction. But I don't think that's the case anymore. So are you saying, is this setting us up? I think we are going to have a strong earnings season, but I don't think it's because financials are providing the guiding light. I think it's all about AI still. And I think that this earnings season will be positive until or unless and hyperscaler says they're cutting their capex plans. And if that happens, that's a complete game changer, like just massive game changer. You do not fight that signal. But I don't think that's going to happen this earnings season. I think that we're probably still, a couple of quarters away. But however, every single hyperscaler earnings call, I will be listening very attentively. And if they ever say we're actually going to significantly scale back on our capex plans, that's the AI trade over.
Okay, and that's the timeline. And certainly ASML's numbers suggesting that we're not there yet. To your point, you're seeing not herd in the markets, herding in AI trades, but not just in equities. You're seeing also in FX and bonds as well. Yeah,
I don't know whether it's because I don't know why this seems to be more extreme than before, but it was really notable what happened in rates. So last Thursday, there was about 6 basis points priced in for July. By the time we got to the CPI meeting, it was about 50% priced. And that was an amazing move between Friday and Monday. And everyone I spoke to over the last couple of days in the hedge fund community was paid rates going into CPI. Warsh obviously regrets it a bit now. They know not everyone was doing July, but they're kind of paying at the front end. And what was interesting is basically all of them were saying, look, the price action says someone got the nod that Warsh was going to be hawkish or was looking to hike rates. And so everyone was kind of hopping on the same trade. But no one seemed to have the source information of why this was the case. But I think we're really seeing extreme herding in all markets at the moment.
Okay, extreme herding in all markets. Does the inflation story leave you more or less concerned about that dynamic? Or is it very backward-looking, given what we're seeing right now, today, in the Strait?
Yeah, I think exactly. I think what's the development over the Strait over the last week has kind of changed the game. I think we talked about this a bit yesterday, about how the tit-for-tat is now seen as adding a structural premium to oil prices. And so even though people have realised from the Strait of Hormuz it wasn't as terrible as we all worried about, and that there is a massive amount of fossil fuels in the world, I think that the supply of them is going to continue to be disrupted and be more expensive than hoped. We've also got what's happening in Russia-Ukraine as well. We're kind of focusing on the Strait, but the Russia-Ukraine thing is almost as problematic. So I think higher oil prices means, yesterday's CPI is too backward-looking and it's old news. It's not solved the inflation problem.
And we've got producer prices later today as well. We'll see if that adds further detail.